Well, the title says it all. Software giant Oracle has just announced layoffs of 200 people. Like many tech companies these days, layoffs have come to Oracle. If you follow this channel, you already know that tech companies of all sizes are cutting jobs. For many companies, 20% of all positions are on the chopping block. That is the case for Snapchat and Intel. Meta Facebook is rumored to be cutting 15%. Google is quietly cutting jobs, but has not said how many. Even though layoffs are bad, 200 jobs amount to a fairly modest number of job cuts for a tech company these days. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for big tech companies? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. The San Francisco Chronicle has reported that 200 Oracle employees are out of a job. This information was confirmed in a notice from Oracle to the California Employment Development Department. All of the affected employees were based at the former headquarters in Redwood City. Oracle is now headquartered in Austin, Texas. "I am not surprised by the news," said Jeff Belisario, Bay Area Council Economic Institute Executive Director. "What this is though is another in a line of companies announcing layoffs or announcing hiring freezes within our region, so I think while we're not at a wave of layoffs or recession," Belisario continued. "I think this is a sign companies are now planning for recession, planning for slower growth, and they're doing that by reducing the labor cost," Belisario added. If you follow this channel, you already know that both Google and Facebook's parent company, Meta, have frozen hiring. Tesla cut more than 200 positions at its San Mateo office in July. "I do think there are more announcements like this coming, and this is the beginning of what is likely to be a recession that we're calling for possibly in the middle of 2023, Belisario continued. "We don't see it necessarily being a deep recession. It's not going to be like the COVID pandemic, it's not going to be like the financial crisis," added Belisario. Many tech companies went on a hiring bonanza during the COVID pandemic. Now the pandemic is mostly over and companies are having to cope with the post-COVID hangover. That means job cuts, and for some companies, a lot of job cuts. This layoff by Oracle of 200 California employees seems rather small by way of comparison. But rumors are swirling that Oracle is actually considering thousands more job cuts. If you recall, Oracle recently purchased Cerner for $28 billion. And it is not uncommon for large mergers to be followed by extensive layoffs. In a letter to the state of California, Oracle said that TS Redwood Shores campus would remain open and operating after the job cuts. Oracle moved its corporate headquarters to Austin in late 2020. This layoff by Oracle included data scientists, software developers, application developers, and marketing specialists. If you are following this channel, you know that Oracle is not the only tech company making job cuts due to a softening economy. Google and Meta Platforms reported decidedly disappointing Q2 earnings. Not surprisingly, both companies revised or revoked forward guidance. Google was still profitable and growing. Meta has posted shrinking revenue for 2 quarters and maybe a third quarter as well. Both companies have hinted at layoffs, but not actually made detailed announcements. Meta Platforms management promised cost cuts, hiring freezes, and ruthless prioritization. Meta has begun quietly pushing out a significant number of employees. The company has restructured departments and given employees 30 days to find a new job within the company. This enables the company to cut a lot of positions without having to issue pink slips en masse. Analysts expect these reductions to be a precursor to deeper cuts. Meta is trying to cut costs by at least 15% by the end of the year. Meta has about 83,000 employees, which is 32% higher than at this time last year. Google has 174,000 employees, which is 20% higher than this time last year. Layoffs at big tech companies are big news because the biggest tech companies went on a veritable hiring spree throughout the pandemic. But the United States is now teetering on the brink of recession and the digital ad market has plunged. Realistically, there are probably a bunch of people at the company who shouldn't be here, Mr. Zuckerberg said at a company town hall in June. Meta head of engineering told managers to fire all employees who were coasting. Shares in Meta Platforms are down by over 50% so far this year. And the market capitalization of Meta has fallen by over $685 billion since its all-time peak in September 2021. The market capitalization of Google is down 27% over the past 122 months. Alphabet chief executive Sundar Pichai said, Google would slow hiring for the rest of the year and employees should be more entrepreneurial. Speaking at the Vox Code conference, Mr. Pichai said that Google needs to be 20% more productive. But not all big tech companies are adopting the stealth layoff approach like Google and Meta. Snap has publicly announced layoffs of 20% of its employees. This comes after Snap grew its headcount by 65% within the past year and a half. Google, Meta, and Snap are probably the most notable of the companies reducing headcount. But there are many others. Real estate platform company Compass has just announced that it completed its second round of layoffs. Compass has yet to become profitable as company. Compass has invested $900 million in its technology platform. This year, it is clear that Wall Street analysts are valuing profitability over prospective growth. As a result, unprofitable tech companies' shares are getting punished. It seems that the day of reckoning for tech unicorns has arrived. And all companies are forced to either be profitable, find a merge partner, or die. The window for initial public offerings is effectively closed. That is why some Wall Street investment bankers are predicting a wave of tech mergers later this year. Twilio, another unprofitable tech company, is pretty much in the same boat as Compass. Last week, Twilio announced the layoff of 11% of its employees and a broad financial restructuring. Twilio will take $90 million in charges related to the restructuring plan in the third quarter. The layoff will affect up to 900 Twilio employees. It comes amid a broad macroeconomic downturn in the United States. The Federal Reserve is aggressively raising interest rates. And the United States is teetering on the brink of recession. But surprisingly, economists are divided on the health of the U.S. economy. A recent Stifel survey of corporate leaders shows that most are anticipating a recession. Another survey from PricewaterhouseCoopers shows that half of all companies expect to lay off employees within the next 12 months. It will be a challenge to return to an environment of stable prices without sacrificing the economic gains of the past 2 years, said Fed Chairman Jerome Powell. Apple announced that it is cutting 100 positions and slowing hiring and spending. Google, which has not yet formally announced layoffs, said that there would be an overall review of sales performance and performance in general. According to the report, the warning states that if third-quarter results don't look better, then there will be blood in the streets. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.